Hello and welcome from Trend Signal for our review of the data and events the week beginning the 30th of March. Um, so we enter the final week of March and the final week of the quarter. Equities were in better shape at the start of this week, slightly less Middle East angst and hopes for the Greek talks regarding the unlocking of the bailout funds and also the Iranian talks, which is also actually ironically pressuring crude, which will be the result of any deal that is struck there, the lifting of sanctions on the Iranian crude. Month end and quarter end on Tuesday, so the markets will be prone to technical pressures as fund managers and traders adjust their positions coming into the end of the month and end of the quarter. We now are in British summertime and Eurozone summertime, so we are back to a 5-hour differential with the US. And it's a strange week this week. We have got, excuse me, quite a lot of data out this week, and the most important data is non-farm payroll or the employment data in the States. But it's out on Friday, which is when the markets are shut in the US. Although it's not a federal holiday in the United States, the markets are shut. But more of that in a second. In the UK, Parliament is dissolved on Monday, so we now have 5.5 weeks of campaigning, which is quite mind-numbing in some respects. A few questions regarding the election and the UK markets. We expect more jumpy markets, I guess, reacting to the polls as they're published. Polls pointing towards hung parliament are inevitable. If we look at the BBC website, which has got a very good section on the election 2015, and indeed a breakdown of the polls, so we can see how close the two main parties, Labour and the Conservatives, are, and the reasons why it is very, very difficult to call. I think the markets will react more the closer we get to the polling day of May the 7th, and anything that is unfriendly to business and could disturb the markets, maybe a Labour SNP coalition. I'm not sure quite how that would pan out, but that may affect sterling and gilts to a certain extent, although I think equities will be less affected. But the best place to get info on the polls is the BBC website. There is also another one, ukpollingreport.co.uk, which explains in text how the polls are going. For example, we've had 2 polls over the last weekend. One gave the Labour a considerable bounce after the Paxman TV interviews, but another one, the Comrades Daily Mail one, painted the opposite picture. So I think it's important to refer back to the poll of polls, and you can get them on a number of sites, but the BBC's is the most comprehensive. Last week, equities all pulled back quite sharply in what was quite a bout of profit taking. I mentioned the technical pressures coming into the month and quarter end, and certainly the market seemed to be suffering from that. The FTSE was off 167, the Dow Jones was off 415, 2.33%, as indeed the S&P 500, that was off 47 points or 2.25%. The DAX suffered less, down 147, which is only just over 1.25%. Otherwise, dollar foreign exchange markets, the dollar continued to lose ground, but it looks as if it might be starting to stabilize a little bit. And we've seen on this chart here the euro dollar on the daily, with it being rejected above that 110 level, and on Monday morning it's continuing to trade sideways to a little bit lower. We've got some important data out this week that will obviously clarify that, although it will be towards the end of the week. Gold and Brent crude. Gold mixed, was off actually $15, and I think it's as the dollar started to recover towards the end of last week that affected gold. Brent crude benefited from the Yemeni situation, but I think the Iranian discussions are overshadowing that as well. So Brent crude, although it rallied 90 cents last week, it really did pull back quite a lot on Friday, wiping out Thursday's game. And this is the chart of Brent crude. We can see here the bar I'm just hovering over, which completely reversed Thursday's sharp gains, and we are now trading some $3.5 off the highs from last week. Okay, so data this week, I mentioned that it's month end and quarter end. Let's just go to our Forex Factory calendar just to review this. It's a shortened week due to Easter. Good Friday is a holiday throughout the developed world. Strangely, Good Friday is not actually a federal holiday in the United States, although the markets are shut. A non-farm payroll or unemployment data, strangely, is actually published by the Bureau of Labor Statistics on Friday when all the markets in the US are shut as well. In the UK and Europe, we won't be able to react to the non-farm payroll data or unemployment data until Tuesday next week. Or in fact, all European markets are shut Monday and will not be reopening until Tuesday. So we shut on Thursday and reopen on Tuesday. So the key data events this week really obviously is the non-farm payroll, the monthly report on the health of the US labor market. The US job creation improved in February, rising to 295,000. The jobless rate fell to a 6.5-year low at 5.5%, and the job gains was actually pretty strong, bearing in mind the harsh weather conditions that had disrupted activity, especially along the eastern seaboard. So the report's going to be crucial for traders because another strong report may well make a rate rise in June more of a possibility. And I know, following the FOMC minutes, that the markets have discounted any rate rise in June and putting it back to September, but nothing is a done deal. Unfortunately, we will have to wait until Monday to react to it in the US and Tuesday if you live in Europe or the UK. Other events this week that could cause a ripple or two: Greece and its quest for much needed funds to stay afloat. Creditors have demanded that the country must implement reforms before they unlock this 7.2 billion in undisbursed bailout funds. I think it will probably go through. The consequences of it not happening could be dire, especially with Easter coming up, which would mean a wait of another week before this could be dealt with. So let's have a look at some of the other bits of data coming out. And I'm going to focus mostly on the US ones, which have more of an effect. We've got the consumer confidence data in the States coming out. That's at 96.6, so slightly stronger than last month, which is a particularly poor reading, falling from 103.8 in the previous month. Nevertheless, the consumer in the United States remains fairly buoyant, certainly for now. We then have the precursor to non-farm payroll data on Friday. This is the ADP employment change. It's a bit erratic. It's one of the bits of data that the market on traders will have to react off, but the correlation between that and the non-farm employment change, unfortunately, it seems to be fairly tenuous of late. And then we have the manufacturing PMI, the ISM manufacturing PMI in the States. Manufacturing has been slipping a little bit. Anything above 50 is still in expansionary mode. We are expecting a slight pullback again in March to 52.5. We then have the weekly unemployment claims, etc., on Thursday, as I said, but the main event is Friday with the non-farm employment chain expected at 251. So a bit of a pullback from that very heady number of 295,000 in February. The unemployment rate remaining at a 6.5-year low at 5.5%. That's it. Thank you very much for listening, and good luck for the markets. Bye for now.